Good afternoon, everyone, and welcome to the first session of Lloyd's Latin America and the Caribbean Academy. My name is Daniel Revilla, and I'm the regional head of Latin America and the Caribbean for Lloyd's. Today, together with the Lloyd's country managers in the region, we will talk to you about Lloyd's, its history, how it works, and its future. If you have any questions, please send them in the Q&A feature at any time during the presentation. We'll definitely have time to address them. And I hope that by the end of this session, you should all be able to get a better understanding of this market and its incredible potential. So what I want to talk to you about today are the four key strategic pillars that guide our efforts at the Lloyd's Corporation: performance, culture, strategy, and purpose. Starting with performance, as you can imagine, the past year has been an exceptionally challenging period for economies around the world and for us at Lloyd's. We estimate that Lloyd's market will pay over £6 billion in COVID-19 customer-related claims on a gross basis. We will publish the exact figures and on all the details in our full year results next week. But on top of COVID-19, 2020 was a difficult year due to a high amount of natural catastrophe activity and, of course, because of Brexit. However, despite this challenging environment, we were able to significantly improve our underlying results. Our Decile 10 program has become a synonym for performance management. Over 3 years, we increased prices by 15%, and this resulted in 7 percentage points improvement in the combined ratio. The current rate environment is outstanding. In 2020, we experienced double-digit rate growth, and we believe we will also see this in 2021. This is absolutely needed, given the ultra-low interest rate environment in which we are operating right now. Year over year, we lost roughly 135 basis points of interest rates, and this reduction must be compensated by underwriting results. On the second strategic pillar of culture, our aim is to further enhance our inclusive culture so that everyone has the same opportunity to succeed and achieve their potential, no matter who they are. We want to focus on the brilliant characteristics that bring us together and enable us to best support our customers from around the world. Lloyd's is committed to leveling the playing field and creating an environment free from injustice from every individual working in the Lloyd's market, so that we can continue to grow and attract the very best talent. We have set an ambition to achieve gender parity within this decade, with a short-term interim target of 35% female representation in leadership positions across the market to be achieved by December 2023. The Lloyd's Corporation has already reached gender parity, with 47% of its leadership roles being filled by women. Through 2021, we're focused on improving also the experience of Black and minority ethnic talent as a top priority. I also want to highlight a little bit about Lloyd's first market-wide environmental, societal, and governance report, which we published at the end of last year. In it, we commit ourselves to policies which will align the market with the Paris Agreement on climate and the UN Sustainable Development Goals. We have pledged that the market will be net carbon neutral by 2050 for both its underwriting and its investment activities. We have also announced plans to exit the underwriting on new thermal, coal, Arctic drilling, and oil sands projects from January 2022, and have pledged 5% of our central assets to support impact investment initiatives. These and other initiatives are all critically important to build global resilience to the impacts of climate change. Moving on to our third pillar, the strategy, which is best captured by our Future of Lloyd's ambitions. The digitalization journey described in the Blueprint 2 of the Future of Lloyd's will be explained in more detail by Yelhis Hernandez later. But four main improvement targets that I hope you can all remember at the end of these sessions are: first, open market placement, delegated authority processes, claims, and data management. All of these are critical for our strategy of the Future of Lloyd's. So the open market placement user journey is supported by third-party placing platforms. PPL is the most widely used platform in the market, and along with other platforms, It has supported, of course, a significant increase in the number of electronic transactions that have taken place during COVID-19 lockdown. To deliver a more intuitive user experience and enable data-led processing, PPL will deliver a new platform with significant enhancements during 2021 and 2022. This will be supported by Lloyd's and all the market associations. For the delegated authority process, the second one, the same principles apply. The platform will be intuitive and capture reliable facility and risk data. This will be core data record and will be single source of data that connects all subsequent processes, including accounting, settlement, reporting, and following endorsements, as well as claims. The delegated authority placement user journey will be supported by a Lloyd's own platform. In the case of claims, just to give you an idea, more than 50% of the number of claims that are processed by Lloyd's have a value of less than £3,000. The cost of managing these claims with the current processes are usually even higher than the claims paid. So we need to find a simpler process for simpler claims. Simple tasks would also be automated regardless of the overall complexity of the claims, freeing up claim handler time for value-added activities. Effective claims orchestration is fundamental to delivering an efficient claims process. We will therefore introduce a new platform to achieve this. Core to this new platform will be a workflow solution that interfaces with insurers' claim systems to create, assign, track, and review tasks. Participants will be able to view the status of their own claims, view or progress their own task, and see the status of tasks assigned to others that are relevant to them. With this, we will drive transparency and reduce claims lead times. In addition, we will consult with the market and explore the central provision of tools and services which will benefit from central procurement, such as the access to third-party data sources, for example, geospatial imagery or hurricane tracking, which are currently procured by all market participants individually. And regarding data, the future Lloyd's market will be digital from start to finish, providing a highly intuitive user experience with data at its core. Capturing complete and accurate data at the point insurance transactions are entered will unlock a myriad of benefits for policyholders, brokers, and insurers. This is the foundation for the Lloyd's market digital transformation, and Blueprint 2 sets out a 2-year plan for its digital execution and delivery. This will include complete and accurate data, a digital spine, and a set of services that link the lifecycle of transactions from placement to accounting, payment, endorsements, claims, renewals, and reporting. Finally, the fourth strategic pillar that I mentioned is purpose. This is newly mentioned as a strategic pillar for Lloyd's. The Lloyd's purpose is the one that you can see on this screen, and is sharing risk to create a braver world. It is our reason for existing, a guidepost for our strategy, and an articulation of why what we do matters and the value we bring to customers and to society. Lloyd's began with a few courageous entrepreneurs in a coffee shop. 3 centuries later, the Lloyd's market continues that proud tradition, sharing risks in order to protect, build resilience, and inspire courage everywhere. And now I'll leave you with Sebastian Gomez, who will tell you more about Lloyd's history.
Thank you, Daniel, and welcome everyone to our first session of the Lloyd's Academy. I'm gonna tell you that we're here to share with you today about who we are, how the market works, why we're here, and our vision moving forward. And we'll introduce all these characteristics of this special marketplace. So who we are, we could say that we're a market that brings together the collective intelligence of underwriters and brokers in order to provide insight and knowledge to understand your risks. wherever you are in the world and any type of risk your clients face. So it's a pretty much special place that has been here for ages. If we talk a little bit of history, we date back to the 17th century, more than 300 years ago. And this was when London's importance as a trade center began to see a lot of demand for ship and cargo insurance. And guess what? In 1688, Sir Edward Lloyd's coffee shop, his coffee shop was recognized as the place to buy marine insurance. And among all the city of London, among the walls of the London city, there were more than 80 coffee shops. And each one of them had a specialist interest to offer. So if you see, there's a lot of history behind, and we've been at the forefront of the insurance industry for more than 300 years. But the way we can keep on developing and keeping ourselves up with the needs of our customers is that the new territory is familiar for Lloyd's. So you'll see here a lot of proud histories of first. The first motor policy was issued at Lloyd's, the first aviation policy, the first satellite. If we look at cyber, for example, we can see that the first cyber policy was issued in the Lloyd's market more than 20 years ago. So this is what is special about the Lloyd's market. It's what constitutes our DNA, and it's that we are always innovating and looking for more solutions, and for those solutions to attend the emerging risks that usually appear. So if 300 years of progress is a lot, we could say we always have an appetite for risks. So there's always place for those traditional risks, but also for those not traditional, unknown, that those that other insurers are not willing to cover. So this is what has been, this is what permits for us to be performing year after year. If we look at this picture, this is how the Lloyd's underwriting room looks like, some of our floors. On a given day before the pandemic, we could have here more than 3,500, 4,000 more or less people between brokers, underwriters, clients, risk managers. We could see all these people meeting together, developing solutions, talking about risk management. And for you to understand the importance of the London market, the London market as a whole employs around 52,000 people. And of those 52,000 people, around 43,000 have something to do with the Lloyd's market. So as a whole, the London and the Lloyd's market is the largest global center for commercial and specialty risk in the world. That's something we are very proud of, and this is something we're going to keep into the future. Of course, the new conditions after the pandemic made ourselves to rethink and to see how our building needs to serve our clients. And Yelhis is going to talk about the future in a second. But again, we will continue with what could be our main characteristics. Bespoke solutions. We continue to find new solutions, tailor-made products for those unknown or emerging risks. Collaboration is key to our market. We need to collaborate. The interaction between brokers, clients, underwriters in one same environment, in one same place, it's an important and an essential part of our business. We always keep responding to the emerging risks that are coming on a day-to-day basis. And again, it's a place where you will find the best minds and the right expertise. And just to give you two quick examples about how special is Lloyd's and how open to review those near risks. Just one example about this expedition that was supposed to happen in 2013, where JLT as a broker came to the market, and between the underwriters and the broker, they managed to develop a specific and tailor-made policy for this unprecedented journey that some explorers were going to do for 273 days in the polar area. So at the end, yes, Lloyd's was critical in designing the policy and obtaining the permits with the UK authorities, but unfortunately the expedition couldn't finish because it proved to be very dangerous. And some other examples is we always think that the exceptional should be protected. Why not? So you're gonna see in the Lloyd's market coverages for a coffee master's tongue or a wine taster's nose or a footballer's legs or the fingers of a guitarist. So this is just an overview of everything we're able and willing to do for you and for your clients. And now I'm gonna leave you with Marco Castro from Brazil in order to explain how the market works. Marco.
Thank you, Sebastian, and good afternoon, everyone. For those of you who don't know me, I'm Mark Castro. I'm the Lloyd's representative here. I'll be talking to you now about how the Lloyd's market works. So we're going to be starting with a short video, which I'm sure you're going to find interesting. Okay, so we move to the next slide, Sebastian, please. So as you've seen on this video, Lloyd's is not an insurance or reinsurance company. Lloyd's is a market where brokers and cover holders take their business to be underwritten by Lloyd's syndicates. Lloyd's is a market where more than 90 insurance companies, known as syndicates, underwrite insurance and reinsurance business from all over the world. Specialist underwriters for each syndicate price, underwrite, and handle any subsequent claims in relation to this. Much of the capital available at Lloyd's is offered on a subscription basis, where Lloyd's underwriters join as syndicates and where syndicates come together to underwrite risks and programs. This type of collaboration, combined with the choice, flexibility, and financial security of the market, makes Lloyd's the leading insurance and reinsurance platform in the world. Sebastian, if you can move to the next slide, thanks. So I'll be using this chart as a base to explain a little bit how the Lloyd's market works. So if you look at this chart, you see on the left, we have our customers who seek coverage at Lloyd's using distribution channels, brokers and cover holders or service companies. In the middle, we have Lloyd's managed agents and syndicates who underwrite the risks. On the far right, we have the capital providers who provide capital for Lloyd's managed agents and syndicates to ultimately underwrite the risks. And underneath, supporting all of that, we have the Corporation of Lloyd's. The corporation that I represent, Daniel Revilla represents, Sebastian Gomez and Yelhis Hernandez represent. We are the Corporation of Lloyd's. And what we do is to provide the infrastructure for the market to operate and oversee the market to ensure that policyholders and members are protected. Let me explain to you a little bit more about what they are, each one of these parties here, and what they do. I will start with the corporation. The corporation roles include ensuring that policyholders and members are protected through Lloyd's oversight of the market. That's the number one role of the corporation, is to oversight the Lloyd's market. This includes agreeing syndicates' business plans and capital requirements and evaluating performance against business plans. Lloyd's reviews each syndicate's business plan. The Corporation of Lloyd's reviews each syndicate's business plan. And if the managing agent is able to demonstrate that the plan is appropriate and justifiable, having regard to its performance and capabilities, then the Corporation of Lloyd's will agree the plan, will approve the plan. The managing agent must then underwrite in accordance to that plan, in compliance with that plan, and with which is monitored by Lloyd's. This is set out in the Lloyd's underwriting bylaws. Lloyd's publishes minimum standards and monitors compliance with those minimum standards for the market to operate in syndicates and managed agents. Lloyd's bylaws also set out a number of rules with which the market participants are required to comply. The Corporation of Lloyd's is under statutory and regulatory obligations to act prudently in its oversight of the market, in particular to maintain the market stability, protect its credit rating, and prevent underwriting behaviors which could threaten the central bank. The Corporation of Lloyd's also provides services for the participants in the Lloyd's market, what they require to trade at Lloyd's. This includes the infrastructure for processing risks that have been placed with Lloyd's underwriters, operating and maintaining the Lloyd's building and the Lloyd's overseas offices, such as the ones we have here in Brazil, in Colombia, Mexico, and Miami, in the Latin American and Caribbean region, and also to maintain the Lloyd's international network of trading licenses and offices, as I mentioned those here in this region. Last but not least, one of the roles of the corporation is to promote the market's attractiveness to capital providers, to brokers, cover holders, and our clients, preserving the diversity of the Lloyd's market. So next to the corporation, now I'll be talking now about the distribution of the business, which we use, as I said, brokers and cover holders. So Lloyd's is a broker market in which strong relationships between brokers and Lloyd's managed agents and syndicates are backed by deep expertise, and they play a crucial role in the business. Brokers facilitate the risk transfer process between the policyholders and the underwriters. Much of this business is a face-to-face negotiation between the brokers and the underwriters. We're going to be hearing later on in this presentation from Yelhis and Hernandez that we're going to be talking about the future at Lloyd's, how this is now being changed going forward. I mean, we're going to be talking about a lot of novelties for the Lloyd's market, including a virtual underwriting book. There are 335 Lloyd's brokers approved at the moment. Let's talk a little bit about cover holders and service companies. It's important that everyone understands exactly what they are and what they do. So basically, cover holders and service companies, they offer local access to Lloyd's. So they are outside of the London market offering the ability to access the Lloyd's market. They are, for instance, in Europe, in Asia, in the US, and also some of them in Latin America and the Caribbean region. A managing agent may authorize third parties to accept insurance risks directly on behalf of the syndicates. These businesses are known as cover holders, and they are a vital distribution channel for the Lloyd's market. What they offer is a local route into Lloyd's in many countries around the world. So that's the difference. It's the cover holders being at different territories, enabling that particular market to access Lloyd's in London. As part of its statutory role in managing and supervising the Lloyd's market, the Corporation of Lloyd's also approves and oversees Lloyd's cover holders. There are 3,950 approved cover holders in different locations around the world. Let me explain a little bit how the cover holders are set in different countries in the region here. So in Brazil, to start with, the cover holder as an entity does not exist in the Brazilian regulation. Therefore, there are no cover holders established as such in Brazil. However, cover holders established outside Brazil can underwrite Brazilian insurance under the authority delegated by Lloyd's managing agents or syndicates. In Mexico, Lloyd's underwriters can grant binding authority to a cover holder located in Mexico, permitting the writing of reinsurance. Lloyd's delegated authority department in London must approve a cover holder prior to its appointment to bind business on behalf of Lloyd's underwriters. In Mexico, cover holders must comply with local reinsurance requirements, and these individuals must have cover holders approval for insurance worldwide. In Colombia, cover holders are authorized by the Colombian regulator, the SFC. However, they cannot be located in Colombia. Also important to mention that as a requisite, all their binders need to be registered with the regulator prior to them doing business and/or binding in reinsurance business in Colombia. The Lloyd's Colombian office is the one that is the one registering the binders for those Lloyd's cover holders willing to write offshore insurance for Colombian risks. If you have any questions about cover holders in those three countries, please feel free to put your question in the Q&A, and myself, Sebastian, and Yelhis will be able to answer those questions. So, talking about service companies, what do? They do a similar work as the cover holders. A service company is a wholly owned entity by a particular managing agent or a related company of that particular group. And the service company is authorized to enter into contracts of insurance or reinsurance for the associated syndicate. It's a route that takes the business into the syndicate using that subsidiary, that wholly owned company of a particular managing agent. It's also able to sub-delegate underwriting authority to cover holders. So it's not difficult to find cover holders that are operating under a binding authority granted by a service company of a particular managing agent. There are 366 service companies at Lloyd's, the majority of them in the UK and the US. So let's talk a little bit about syndicates, what they do. I mean, basically, syndicates, they write insurance and reinsurance. A Lloyd's syndicate is formed by one or more members who join together to provide capital and accept insurance and reinsurance risks. Most syndicates write a range of classes of business, but many will have areas of specific interest and expertise. Syndicates are technically set up on an annual basis. In practice, these usually operate from year to year, with members having the right, but not the obligation to participate in syndicates the following year. This continuity of capital back in the syndicates means they function like permanent insurance operations. Each syndicate sets its own appetite for risk, develops its own business plan, which is approved by Lloyd's, or has to be approved by Lloyd's. It arranges its own reinsurance protection and manages its exposures and claims. Managing agents, in Brazil, in some countries, in Latin America, the expression managing agent is not really that, not used that much. We use more syndicates, but basically managing agent is an administrative entity that manage the syndicates. A managing agent is a company set up to manage one or more syndicates on behalf of the members. Managing agents have responsibility for employing the underwriters, overseeing their underwriting, and managing the infrastructure and day-to-day operations. There are 53 managing agents at Lloyd's, which manage 90-something syndicates at the moment. Last on the chart that you have, members agents. They provide advice in administrative services to members, including, for instance, assisting the members to select syndicates they want to support. There are only 4 members agents at the moment at Lloyd's. Members, it's very important to understand, members are the capital providers, is where the money comes from for the syndicates, the managing agents to underwrite and accept those. So capital to underwrite policies provided by them, the members of Lloyd's. In the past used to be individuals. Now, these days, not anymore. The capital is backed up by many of the world's major insurance companies, listed companies. There are some individuals still, but not many, and some limited partnerships with corporate groups providing the majority of the capital for the Lloyd's market. Next, please, next slide, Sebastian. On this slide, you can see the logos of Lloyd's managing agents as of December 19, when we published our latest annual report. So I'm using that picture. And when you look at that picture, you see this is the Lloyd's market. You see, you can certainly recognize many brands of groups which operate on their own outside Lloyd's in the international market. But these groups have chosen to also have a syndicate or shop, as we say, at Lloyd's, because all of the good reasons which make the Lloyd's market so attractive and the leading insurance and insurance platform in the world. Next slide, please. This slide shows those groups, where they come from. So you look at that and you see 19% of those groups that have a business at Lloyd's, have syndicates at Lloyd's, comes from the US insurance industry, 14% from Bermuda, 12% from the UK, 11% from Japan, nearly 10% from Europe, and there you go. So that gives you a good sense of where the capital that is backing up Lloyd's market comes from. The next slide, please, Sebastian. Let's talk about the Lloyd's security, which is very, very important. So to start with, we all know security is crucial for anyone buying insurance and insurance protection. So it gives confidence to capital providers and also peace of mind to policyholders. Lloyd's strengths and robust capitalization is fully reflected in our ratings. So these 3 leading insurance rating agents recognize Lloyd's strengths and the financial strength of the market. We see there Fitch with a AA-, we see Standard & Poor's with A+, and AM Best with A. All syndicates benefit from Lloyd's central resources, including the Lloyd's brand, the Lloyd's network of global license, and the central fund. As all Lloyd's policies are ultimately backed up by this common security, a single market rating can be applied. So all of the Lloyd's market enjoy the same rating. These ratings have been applied to the Lloyd's policies since 1993. The chain of security, also very important, very well known. When we talk about how strong is the security at Lloyd's. So Lloyd's unique capital structure, often referred to as the chain of security, provides excellent financial security to policyholders and capital efficiency to members. That's very important. The corporation of Lloyd's, I've mentioned before, is responsible for setting both member and central capital levels to achieve a level of capitalization that is robust, yet also allows members to potential that earn superior returns. So allows them to get superior returns. There are 3 links on that chain of security. The first link is the syndicate level assets. The second one is the members' funds at Lloyd's, and the third one is the central assets, including the central fund. The funds in the first and second links are held in trust, primarily for the benefit of the policyholders whose contracts are underwritten by the relevant member or syndicates. Members underwrite, the syndicates underwrite for their own account, and they are not liable for any other members' losses. So there's no communication from one syndicate to another on those two levels of the chain. The third link is the mutual one. The third link contains the mutual assets held by the corporation, which are available to any member, to any other syndicate, subject to the approval of the Council of Lloyds. Next slide, please, Sebastian. So this slide shows you, a bit of a big picture of Lloyds. In 2019, Lloyds has written approximately 36 billion of pounds in premium, approximately 44 billion US dollars. And the premium comes mostly from the US, 52%, US and Canada, 28% from Europe, including the UK, 10% from Central Asia and Asia Pacific, 6% from other Americas, and 4% from the rest of the world. Next slide, please, Sebastian. So Lloyds is licensed to write onshore insurance in 8 countries, onshore insurance in 100 countries, and offshore insurance in over 200 countries. Lloyds has licenses and authorizations to trade in over 75 countries, which means Lloyds is either a licensed or an eligible surplus lines insurer, or is authorized or registered as a reinsurer only. So we cover pretty much the whole world. Next slide, please, Sebastian. This is the last slide. This is just highlighting the classes of business that we write, more than 200 lines of business. So this is pretty much it. I'll pass now to my colleague Yelhis Hernandez that will talk about the future. Thanks.
Thank you, Marco, and good afternoon, everyone. Let's continue the conversation talking about why Lloyd's. In addition to our ecosystem of products, the competitive environment and capital efficiencies that it seeks, being part of the market means improved economies of scale. This unique aspect of our market means that you receive the best possible outcomes on coverage price by placing business with the world's largest insurance and reinsurance market. In that sense, our 4 key strategic pillars are at the core of what we do. And as Daniel mentioned, these pillars guide our efforts at Lloyd's Corporation: performance, culture, strategy, and purpose. I'm not going to add much about them in a specific, but I will briefly touch on them to move on to the exciting world of innovation and future at Lloyd's, which are at the heart of our corporation. On performance, as you know, we were able to improve our results. Over 3 years, we increased our prices and rates with more technical and robust underwriting methods. And this resulted in improvement in our combined ratio. We have seen this in 2020, and for sure we will continue experience this in 2021. On culture, we aim to enhance our inclusive culture by creating opportunities for everyone working in the Lloyd's market through a more inclusive environment. I will get into more details on the strategy later on the presentation, but for now, let's talk about the newly added pillar, which is purpose. This purpose is sharing the risk to create a braver world, and this is the Lloyd's difference. At Lloyd's, you will find expertise and choice. You can benefit from the collective intelligence and risk-sharing expertise of an entire marketplace. Sebastian, could you click one more, please? Thank you. That gives you the access to the widest choice of insurance solutions via the global network. You will also find insight and confidence, a market that has the knowledge to develop new and innovative forms of insurance and that can protect what matters most to people, business, and communities. You will also find partnership and ecosystem. We work with you for the long term to make sure that you have the right solutions and the best possible outcomes across price, coverage, and service. You will also find a hub of knowledge. Lloyd is a center of insurance knowledge. Market participants have access to research reports, data, and underwriting modeling. All of us makes it easier to understand your risk and create the perfect coverage. Some of you probably are aware of the Product Innovation Facility. This new initiative aims to speed up the insurance product development for new and emerging risks. 53 million pounds backs the Product Innovation Facility, which gives our underwriters a safe space to experiment with solutions that can add value to our customers and widen the offering of our markets. Lloyd's aims to enhance our capabilities in the insurance product space by focusing on thought leadership, best practices, and efficient use of data. As a broker and underwriter, you will have access to the latest market insight, including the Insurance Gap Report, the City Risk Index, and our innovation incubator, the Lloyd's Lab. This helps the market to make informed decisions when placing risks. Let's talk now about our incubator, the Lloyd's Lab. Lloyd's growing list of insurtechs is making the market more efficient and customer-centric. We champion tech innovation and talent through initiatives like the Lloyd's Lab, which helps to connect the brightest and best talent from the technology sector to Lloyd's capacity, and that helps to develop new ideas, new ways of working and servicing our clients. We want to harness this creative spirit to help us to build the new Lloyd's, which is more customer-focused, faster, and more efficient than ever. Some examples of product creator in our Lloyd's Lab are, for instance, the parametric insurance in innovations or solution. Actually, 2 days ago, we launched a new parametric earthquake insurance policy in New Zealand with partnership with Bounce Insurance. And this new product uses cutting-edge technology and real-time GeoNet data to automatically pay customers within 5 days following a strong earthquake. By working alongside conventional products, this new solution offers accessible earthquake insurance with low monthly premiums and provide customers and their communities with financial resilience in the immediate aftermath of an earthquake. This is a product that can be easily placed here within the region, and this is what we are looking for. We are looking for scalability and a global view. Another example is Parcel, a supply chain data platform that combines low-cost sensing hardware and a large-scale data mining to allow insurers to better anticipate risk and improve the claim process. Parcel products was brought to the market via the Lloyd's Lab, and syndicates can now offer enhanced coverage for marine cargo classes, giving us a deeper insight into every insurance product place. We recognize that our success and future partially lie in the value exchange between our knowledge and expertise and adjunct technological innovation. As a matter of fact, Parcel is now covering the insurance of the vaccine for COVID-19. Thank you, Sebastian. We are now entering into the future Lloyd's and Blueprint 2. Lloyd's will be the world's most technological advanced insurance marketplace, where customers can buy the widest range of products and services from the world's leading commercial insurance ecosystem. What we want is to offer better solutions for our customers. We want to simplify the access at Lloyd's. We want to reduce the cost of doing business with us and to build an inclusive and innovative culture that attracts the most talented people to Lloyd's. Since we published Blueprint 1, we work closely with the market and other stakeholders to deliver value as quickly as we could to the market participants. Some of these deliverables are the virtual room, 4 new syndicates in a box, and a streamlined claims process, and a new cultural advisory group, among others. So the future at Lloyd's, of the future market will be digital from start to finish, providing highly intuitive user experience with the data at its core. Capturing complete and accurate data at the point of the insurance is entered will unlock many benefits for policyholders, brokers, and insurers. This will be delivered for some classes of business and processes during 2021 and 2022. So the future of Lloyd's is research insight-led. This means that we listen to the market and aim to solve the current pain points that the market experiences. We have established several ways to gather insight and for the market to help shape and create the future at Lloyd's. Anyone can sign up to join our research panels. These cover a range of topics on an ad hoc basis. For example, this research panel helped create the virtual room by working with the market participants around the pain points of working remotely. There are also working groups where we pull in market expertise from market practitioners who really understand the process that we are improving or transforming. These working groups focus on specific projects and work streams. So if you want to be part of this transformation, please visit our website at lloyds.com to find out more about our initiative and to be part of it. Are you ready to be part of the future? The future at Lloyds. Thank you. Daniel, let's get back to you.
Thank you, Yelhis. And I hope you all have enjoyed this whistle-stop tour covering Lloyd's history, how Lloyd's works, and its future. I have been busy trying to answer a few questions on the Q&A feature, but now I would like my colleagues to join me to answer any additional questions you may have. Valdir Serra from the market development team will moderate the questions. So please, with any questions you may have, put them on the Q&A or send a chat to us, and Valdir will be moderating it.
Hi, Daniel. Thanks for that. So far, we've got one question regarding COVID-19 coverage. And this is asking whether there is coverage and in what line of business. I'm not sure who from you guys would want to take that one.
Thank you, Valdir. Well, as I mentioned, Parcel is covering the transportation of the vaccine. This is part of what we do. We're covering the transportation, and Parcel also created a syndicate and a managing agent to cover that part. But it's more for transport rather than the vaccine itself.
And just to add on that point, there were some wordings among the property policies for the SME market that covered denial of access and the BI following that denial of access. So those were wordings that some clients used to have before the pandemic, and that granted the cover for their BI loss after the lockdowns.
One more point I'd like to make is that before COVID, a couple of years ago, there was a pandemic coverage offered by one of the syndicates at Lloyd's. It didn't have one taker. So it's interesting that now, of course, when the pandemic has exploded, the coverage is very much sought after, but it's in a difficult situation that we are in at the moment. There are different parts of the transportation chain that Yelhis has mentioned that are covered on the transportation of the vaccine, for example. There is going to be some different parts of coverage for business interruption still going in the future. There is going to have to be heavy exclusions, of course, but this is a market, and the appetite for writing insurance business is always prevalent. We're going to see interesting developments in the market, I'm sure, going forward as well. I wanted to address one of the questions that I saw that I actually answered before, and it was Marco. I answered it because you were speaking at the time, but basically the question was about They were asking, what is it? Sorry, he says, sorry, I couldn't hear what was the difference between managing syndicates and the others. So I assume the question was about managing agents and syndicates, and then maybe cover holders and service companies. Although I know you addressed it already, if you don't mind, just give it a shot. I did put my answers in it, and I hope you're going to answer the same as me, and I'm sure you will. But there you go. If you could answer that.
Thanks. Yeah, just before I answer that question, just add something on the COVID-19. The question was so broad. You know, there are COVID-19 coverage in what line of business? I mean, there are so many risks related to COVID-19. So I just want to remember that the traditional class of business may have somehow a risk that is related to the COVID-19 pandemic we are all living. And you will find coverage on traditional class of business for risks that are related to the COVID-19. You know, you have transportation, you have aerosol emissions from medical practitioners and those things. So just keep that in mind as the question was very broad. Yeah, on this other question, I think the answer to the question was what is the difference between managing agent and a syndicate. I mean, in Brazil, that's for sure, but I believe in other countries in the region, we don't use very much the expression managing agent. People really refer to Lloyd syndicates, with Lloyd syndicates all the time. So when we talk about managing agent, they ask, what is that? So a managing agent is basically a manager of one or more syndicates. It's the entity that is set up as a company to hire the underwriters, to pay their salaries, to monitor their results. Is the administrative part of the business, right? And the syndicate is the technical part of the business. So the underwriter is sitting at a syndicate box at the Lloyd building. The moment they are underwriting risks, the manager agent is sitting in an office managing the operation of the syndicate. That's basically the difference.
Thank you, Marco. Valdir, before we go to the next question, I just wanted to make one precision, which is interesting for me in learning it when I did a few years ago. So managing agents are entities, are legal entities, and they are permanent in time, whereas syndicates are associations of members, and they have 1 year, normally 1 year of life, and they can re-emerge every year or be recreated every year. But in principle, syndicates can close after a year, and then there is a process on how do you manage the liabilities of that syndicate. But the company that will foresee the payments and all the admin stuff from the syndicate is going to be the managing agents, and that is an interesting difference as well.
Thanks, Daniel and Marco and everyone for their contributions. Just one from me on the line of business. I think people asked about COVID-19, and I believe the one that was most impacted regarding COVID-19 pandemic was event cancellations. Just out of curiosity, if that's what it was the question for as well.
Sorry, Valdir, could you repeat that? I couldn't quite get what you just said.
Yeah, sure, Daniel. So they're asking, are there COVID-19 claims and what lines of business would that be in? So what I said was that the one line of business that was most impacted at Lloyd's due to the COVID-19 implications was events cancellation.
It's the class of business is contingency. It is how it's known, and events cancellation is one of those lines of business within that big contingency umbrella. And the second biggest line of business that was affected was property, because as mentioned, many of those policies, property policies, did have coverages or for contagious diseases or denial of access, and that's why it's such a big number. But that's mostly in the UK and in the US. The truth is that in Latin America, the losses related to COVID were very low, very low. The exclusion of the pandemic was very well defined in the wordings we use in the region.
All right, thanks, Sebastian. I think it's a question here for Sebastian, as you were speaking, Sebastian. Someone here is asking if in Colombia is mandatory to deposit premium reserves of 10 or 20% depending on the line of business. This regulation is known and accepted from all the syndicates. Is a question here. I'm not entirely sure what it means, but
yes, we do have some let's say requisites to write cross-border reinsurance in Colombia, and yes, the regulator has defined some premium reserves that the cedents must retain for a period of 1 year and then pay them to the reinsurer. Those premium reserves vary between the lines of business. So it's a percentage for sabotage and terrorism, for example. There's another different percentage for oil and gas risks. But yes, it is a common practice and is something that the market is aware of, and the brokers should be very clear with our underwriters when binding or when placing or when broking Colombian risks.
Thanks so much, Sebastian. There's another question here. It could be to any of you really. Is on parametric insurance. So the question is, does Lloyd's consider as part of its product a gamble risk portion? Well, that is there a portion that does not necessarily have to do with reasonable occurrence parameters, but with some random event, and then considered as a gamble whether or not it will occur?
So I can give you my 2 cents on that. And it's one of the first things I learned when I joined Lloyd's is if it's a gamble, it's not insurance. So you're not allowed to play with that, right? And that for me, I don't know the parameters of the parametric insurance that we're offering in now in New Zealand. I know the one that we have been offering already in California, for example, for earthquakes. And when we spoke with the cover holder who was placing those business, it was very clear. The parameters were as soon as an earthquake occurs within certain amount of kilometers from your home, your zip code where you are living, it doesn't matter if your house gets damaged or not, but there are going to be some expenses that you're going to have likely. It doesn't mean that you're going to have to be impacted. Your house doesn't have to get shattered, destroyed, or burned down. As long as you were within the parameters of what the policy was protecting you for, there are going to be some expenses that we assume you will have, and hence is not a gamble anymore. It's you are protected because you live in that area, and you're going to have expenses from just school closures, water pipes broken, or whatever else. So that would be my answer. I don't think gambling is part of it.
No, and there's a key word within those products, and is the trigger. You know. Mm-hmm. That trigger needs to be defined to activate the coverage. So the parameter would be that trigger, and once it is triggered, then the coverage is working.
Yeah, if I can only add to this, Sebastian, of course the triggers, they are defined with a very comprehensive actuarial model behind it. So the underwriters do not gamble on how often the triggers will come, or what is the likelihood. So there is quite a lot of study behind the parameters that will trigger the policy to pay the parametric insurance, and therefore it is an underwriting process, much like any other underwriting would be. So that would be my 2 cents with that.
Thank you.
Just give me one moment, and I'll have a look at the other questions here.
Do we have any more time?
We have 1 minute. No, well, actually, we run out of time now. Yeah,
on the top of the hour.
Yeah. So there is a comment there. If you want to read it, but there is a comment for Sebastian.
Yeah. So as for the premium reserves, it's important to mention that those apply to proportional structures. at least when talking about facultative placements. When talking about non-proportional placements, premium reserve is not required. I think it's a comment to add to what you just said, Sebastian. So you're welcome to.
Thanks. Yes, that's correct. Thank you.
Good. I just want to say thank you for everybody to being with us today, and we need to close down because of the hour has evaporated with this topic. Please join us again on April 7th for the second session of the Latin American and Caribbean Lloyd's Academy. The topic will be engineering and construction lines and will be delivered by Steve Cross, underwriting from Axis. Thanks so much for your participation today. Have a great day.
Just before we close the session, this was recorded on YouTube, and we will be looking to share the link with everyone, so you will be able to revisit this if you wish. That's one of the questions we had in the chat too. So thank